In this video, guys, we are going to look at a tactic to help you if you're always losing after a series of winners. Stay tuned. Hey traders, warm welcome to you. Thank you so much for joining me. All right, so I've got a quick tactic you can use if you're struggling to keep hold of those gains. You have those win, and then you kind of always lose. And if that's a recurring pattern for you, then we can fix it right now. By the way, if you are kind of a seasoned trader, if you are a trader who's getting some traction, who's just trying to get over the edge, or maybe kind of got things that aren't quite dialed in, I want to talk about a quick win for you if you are always losing after a series of winners. Okay, so what we don't want is this, right? We have the win. You feel good about yourself, you come in and for some reason, something changes and you end up undoing all the good work. And if you're not careful, you end up going back to square one. If you stop it, you have to still recover and spend the next month recovering. We want to avoid that. We want to find out how to fix that. So a couple of ways to fix that. Also, a couple of reasons, should I say, why this happens. Number one, the market conditions change. So forget about your mindset for now. Take your brain out, put it in a jar. Well, don't, but what a stupid thing to say, but you get the idea. Forget about your mind for now, and let's just look at it from an operational perspective. And that is that maybe you're trading pullbacks, you're buying pullbacks, the market's going round, and you're making lots of money, doing well because your curve is coming up. All of a sudden you start buying pullbacks, the market's stagnating, the market's maybe pushing to lows. It's changing conditions. So if we did put our brain to one side for now and our discipline and our mindset, and we said, okay, what's happening? Then sometimes it's due just down to the operational considerations of the market rhythm, the nuances, the phase we're in. And so that's an easy fix, because you can say, right, hang on a second, let me start to look at the metrics of my trade versus this section. So you section off your trades and you go, okay, here's my section. What did I do really well in that period of time? And what were my trades like? And what's going on in this period of time? What were my trades like? And you go, look, market conditions have changed. Volatility is contracted, or whatever it is. Okay, I need to back off. And so it's a commercial thing. You're just reviewing from a trading business perspective the conditions you're in, and you're saying, hey, I'm better in that condition. I just need to use a different strategy, or at least back off the throttle for now until we go back into that mode. And we might go back. Markets don't always just go up and up and up. Often they do, and they stagnate for a little bit before they carry on in the bull market. So you can avoid that by backing off quicker and then getting back onto your buying pullbacks strategy. And that's just an example. It could be various things, but it could be conditions that are changing, and then they're normally exaggerated by mental aspects of it. So we'll talk about the mental aspects now. So the mental aspects often are this, is that, and normally it's a combination of two, actually. Still a combination of two normally, in different, the pie chart splits up depending on the personality of the trader. But often what happens is we feel great. Okay, we feel great. Let's say you're at a good level here. Let's say you've made your first 100K. You're like, wow, I've made my first 100 grand. I'm feeling great about it. Or maybe it's a little bit lower. Let's imagine it's a little bit low. There's your first 100K. Imagine it's there. And you've kind of gone up in 102, 103. You're like, you know what? Yeah, things are looking good. I can see myself making the first quarter. I'm on my way. And we like that feeling. And it's a good feeling when it's chug. And actually, when we start to draw down, we don't mind. It's a little bit like, oh, I came back, I'm 101, I was 105, okay. But then if you dip down to say 98, you're like, oh, I need to get back above 100. And I'm using this example, like I'm kind of adding a little bit of fuel to the fire by having a whole number that's meaningful to you, your first 100 grand as an example. But it doesn't have to be that. It could be any high watermark of a number, but sometimes it hurts more when it's kind of something significant. And then we see it coming down and down. And so we have a different sense of urgency to the way we trade. We start to think, I want that feel-good feeling back. Yeah, I felt good when I was at that level. I felt great. And how do I get it back? I get it back by trading. I get it back by making a couple of winning trades. I just need a couple of winning trades, I'm back above and I'll feel good again. And we chase that. We look at that and we say, hey, I want that feel-good feeling. How can I get that? I get that by the quicker I trade, the more money I put on the line, the more likely I am to get back above that level again, and I can feel really good and feel, yeah, I'm back above my level that I wanted. And that's dangerous, because that encourages bad behavior, it encourages over trading, it encourages taking excessive risk, it encourages all these other things that we know that are not conducive to success in trading. And so we don't want to be in a position where that fire is lit within us of an urgency to get back. And so one way to kind of combat that is to, and you kind of brute force it, you can kind of go and say, hey, I'm going to be focused, and fine. But one way to kind of trick your brain, if you like, I don't believe you can always trick it, one way to kind of make yourself a little bit at peace with it is just to always imagine that your equity is at a pullback level. So, most people trade really, really well when their back's against the wall, their feet to the fire, and they have to wait. They have to do the, great journaling, great preparation, picking the trade, structuring the trade, good risk reward ratio, anticipating, not reacting, all that other good stuff. They're very, very good in that condition. But sometimes, we go to pop when we're trading differently. So imagine yourself here. Imagine yourself, you are drawn down and you're kind of putting everything right. You're doing everything. You're not desperate, but you're kind of like, you know what? It's long term now. I need to knuckle down. I need to get a good month under my belt. Consistency, process. And it just puts you in a different frame of mind. So even if your equity curve is at highs, you can create an Excel sheet and make a faux equity curve, if you like, and say, hey, this is what it is now, and imagine it's this. And the more you can think of it like that, the more you can kind of progress. And in fact, often you can reset this regularly and go, hey, when you feel like you're overconfident, when you're taking stuff you shouldn't be trading, you're like, okay, I need to reimagine myself in drawdown and doing what I need to do to recover. Because very often we're good at that. Very often as traders, we're good when we knuckle down, we do things the right way of recovering back to where we were. We're trading with discipline, we're trading with focus, we're not breaking our rules. So if we can synthetically create that in our mind, then that might help us improve. And so something to consider, guys, is to imagine yourself in that drawdown position. Whether you do create like a false chart, whether you do visualize it, whatever it is, before the trading day you do this, it can help you think, hey, my back's against the wall, I need to do this. And actually this idea came from Don Miller. And Don Miller, great guy, one of the good guys out there, a legitimate trader who's just doing good stuff. He used to have a blog, I'm not sure if he still has his blog anymore, and he has some great videos on YouTube as well. I think he's called them Trading After Dark, when he's kind of trading and scalping. Not style for everybody, but super interesting, some great content on his blog as well. I guess there's a link to it on there, I don't know it off the top of my head, but that was something that he suggested. I've seen this before other traders as well. He's like, okay, if I imagine myself in drawdown, that's going to help me hit that 2 million target in the year much better, because I perform better when I'm under pressure. And I think many traders do perform better when we are in drawdown. We have to get everything right and precise and structure the trade correctly. So rather than feeling good and letting yourself feel too good about things for too long and then being overconfident and being blasé about how you execute, imagine yourself, hey, drawdown, I need to recover back, and having a little bit more concentration and focus. And again, if you can create that synthetically somewhere, then that's not a bad way of doing it. All right, guys, take care. I shall see you in the next video. Bye for now.